I'm Taylor Riggs in San Francisco. This is Bloomberg Technology. Coming up in the next hour, tech titans Uber CEO Dara Khosrowshahi and Alphabet and Google's Chief Financial Officer Ruth Porat join the Bloomberg Global Business Forum in New York Wednesday. Can big tech manage its own risks? And cybersecurity firm CrowdStrike found itself in the middle of the Trump-Ukraine scandal. We'll have the exclusive interview with CEO George Kurtz. An exit stage left. eBay CEO steps down from his role amid turmoil at the global marketplace. Who next will help invigorate the floundering company? But first, to our top story, the continued regulation of big tech in the U.S. and across the globe. That was the hot topic at the Global Business Forum in New York, where the question being asked is, will regulation stifle innovation? To try to answer that, Bloomberg's Eric Schatzker sat down with Uber's CEO Dara Khosrowshahi and Alphabet and Google's Chief Financial Officer Ruth Porat.
So there are plenty of areas where we're currently already regulated or leaning into regulation. And I'll give you a couple of examples. At Google, privacy is sacrosanct. It has been from the earliest day. Our view is that it is your data. And so early on, we invested in things like privacy controls so that it's easy for you to find your data and your controls. 20 million people go to our privacy controls every day, and we keep trying to improve them.
20 million.
20 million people go every day. And the question for all of us is what kind of relationship do you want to have? If you were trying to get here today, trying to figure out the easiest way to get here, the fastest way to get here, and you Google, how do I get to the plaza quickly? It is helpful to have that anchor in your location. That is a choice you're going to make. Or if you're coming to New York for this event, when you're coming, you're going to get fed with what events are going on, the weather, is your flight on time. That's a choice that you make. So users should have the opportunity to have a choice, and it is our obligation to make sure their data is protected, they know it's theirs. If they want to leave, they leave with it. So we've done a lot of work on privacy and data. How does that relate to your question? There is still a yearning for more. And so what we are doing very clearly is working with Congress. We're clear that we support national privacy legislation. As always, the devil's in the details. And therefore, I think it's incumbent on each of us to lean in and provide insight into the areas where there would be unintended consequences from regulation. So privacy is one example. Another one is the question is often asked of tech, are you paying your fair share in tax? The reality is we've paid at the OECD average for the last decade, but that narrative still exists. And one of the key issues is that the international tax structure is outdated. Now, the OECD has come forth with a proposal which is gathering more support for a fundamental redo of the international tax system. We very clearly support that. And again, devil's in the details. How do you work through it? But it does feel like it is progressing. So if you want to be a constructive part of the solution, you have an obligation to bring whatever insights and technical expertise you have so that we end up with smart regulation.
I do think that one of the dangers of the regulatory regime and the directions that we're going in right now, I very much agree with Ruth's direction, is that regulation and innovation are not friends. And listen, we're big companies. And we will have the dialogue and abide by the regulation on a global basis. And when the rules are clear, we're going to follow those rules. Absolutely. But I do think that the startups of the world, the businesses that are building the exciting new ideas, et cetera, whatever regulation there is, we would want there to be room for innovation at a certain level, at the much lower scale, so that you can have startups who have some sandbox to innovate in, to take some risks in, at a size in which they're not kind of a fundamental changer one way or the other of society. And then once they get to a certain size, they've got to regulate, they've got to abide just like everyone else. So the direction, the dialogue, I think is a positive dialogue. The large global companies are going to do what we should, and we're going to do the right thing. But to create a sandbox for innovation that, 10 years ago created Uber and 20 years ago created Google, for that innovation still to be possible within a regulatory framework, I think is incredibly
Does
important.
either of you think that sandbox is getting too small?
I think some of the rulemaking is problematic for startups. It's tougher for them. They have to think about 5 different things versus just going and building a great product that consumers love, et cetera. So
Anything you'd point to specifically?
When you look in Europe and some of the regulations there, there's a European startup tech scene out there, and they have one more thing to worry about. Now, ultimately, I think it's a good thing, and this is a necessary ingredient. But as we look forward, I do think we should look to create a sandbox for the smaller players.
Do you see places where regulation is stifling innovation, Ruth?
I think there's the risk of it. One of the most extraordinary opportunities for all of us today is the application of AI machine learning to our businesses. It's already in so many of the elements of our life we take for granted, like voice search or image search and translate. It can be helpful in so many areas like disease detection. It's an extraordinary asset for us as a country, for us as a society. And so one of the key questions is how do we ensure, in particular in this area, where there's such potential on the upside and potentially on the downside, that we're managing it properly. Our approach, very similar to what has been done throughout history when there have been big science breakthroughs, is to try and put out a set of principles and ask others to build on it. And that was done with IVF and stem cell work and PCB. So this notion of industry standards and build, we think is a constructive and nimble way to continue to make advancements. One of the questions is, where does this go? And I think the risk in particular for the US is, how are we going to ensure that we're continuing to support innovation and not therefore really slow down what we're able to do relative to others?
That was Uber CEO Dara Khosrowshahi and Alphabet and Google's Chief Financial Officer Ruth Porat speaking to Bloomberg's Eric Schatzker. And to discuss this further, Bloomberg Technology's Garrett DeVink in New York joins me now. Garrett, give me your reaction. I guess we shouldn't be surprised that the Uber CEO wants less regulation than some of the big tech players out there, like a Facebook or a Google. But is there real concern here that all of this antitrust scrutiny and extra regulation is really stifling innovation?
Yeah, I mean, I think what Khosrowshahi said there is something that you hear here and there. I mean, I think it's interesting. He specifically said, look, like, we're fine with the regulation, we're dealing with it. I mean, that's very much his line as Uber's sort of cleanup CEO, get the company kind of more palatable for regulators, for the public markets. But what he said, is that younger companies, startups, are having trouble dealing with these things. And I think when he was talking about Europe there, he was speaking specifically about privacy regulation that sort of, it puts an incumbent on not just tech companies, but all companies to really make sure they're getting consent for collecting user data. And so I think this idea that now that we have these big tech companies who are now able to sort of deal with regulation because they have armies and armies of lawyers, they can just hire people to sort of, deal with the problems that regulation might, or the costs that regulation might give them. Smaller companies can't always do that. And so, this is an argument you often hear coming from the smaller companies, because sometimes the big companies actually want regulation to entrench their position and make it harder for smaller, younger competitors to come up against them. And so this is a conversation that's been going on. It's interesting to hear Uber sort of opine on it.
Garrett, it was interesting that right around the time that the Uber CEO was talking, a Bank of America analyst came out with a note talking about how sentiment around Uber and the shares are at a low point, namely around AB5 and more regulation in California. Do you get that sense as well?
Yeah, I mean, I think AB5 and the regulation there, so that's essentially the law that says if a person is part of a company's core business purpose, they need to be classified and treated as an employee and not a contractor. And so Uber's argument here is that, they are a platform for multiple different things, including driving, and drivers are not necessarily shouldn't, be classified as employees for them, and they're going to fight this one in the courts. But he did say that they were kind of, late coming to this. I mean, I'm not so sure about that. They were definitely fighting about this, very sort of strongly for a long time. We'll see how it goes.
Bloomberg's Garrett DeVink, thank you for joining me. And another bump in the road for WeWork. So Bloomberg has learned that the company will likely postpone its initial public offering until next year. That follows Tuesday's move by Adam Neumann, who stepped down as the company's CEO and will take a new role as non-executive chairman. WeWork had initially sought to go public this month. And coming up, sticking with CEO resignations, we discuss news of eBay and Juul CEOs following suit. How this will impact each company next. This is Bloomberg. The CEO of eBay is stepping down amid the company's ongoing operating review. Devin Wenig has been under pressure from activist Paul Singer. Singer has been pushing the company to spin off some of its businesses, including StubHub and the Classifieds Group. eBay's chief financial officer, Scott Schenkel, has been appointed as the interim CEO. Joining me to discuss Bloomberg Technology's Spencer Soper, who covers the company. Spencer, how much of this stepping down is due to the financials of the company?
Well, part the performance and also just holding the company together, not selling pieces that activist investors want sold. This is bringing eBay a step closer to the scrap heap. It kind of feels like eBay breakup part 2, because if you remember, this is a very similar situation that eBay faced about 5 years ago when activist investor Carl Icahn was pressuring then CEO Steve Donahoe to break up eBay and PayPal. And now we've got further pressure, but this time we don't even have a promising up-and-coming company, that they want to spin off like they did with PayPal. It's more just to break up what's left over.
Yeah, what are the activists pushing for in terms of breaking up the company? How do they think they can unlock value?
Well, there's been pressure to sell their ticket marketplace StubHub, and the classifieds business is more like a local marketplace, similar to like a Craigslist type thing or the startup OfferUp. So they want to further break up the pieces, and Wenig has been resistant to that, arguing that there could be these synergies. For example, StubHub, they were thinking, well, we sell sports memorabilia and band memorabilia, and if somebody's getting a concert ticket or a sporting event ticket on eBay, maybe they'll spill over and buy the T-shirt. But those synergies never really materialized, and it's just been the same story for eBay since even the PayPal split. It's just that there hasn't been much growth. Amazon just leaving it further and further in the dust.
What can interim CEO Scott Schenkel do that the previous CEO was not able to do?
I don't know. I mean, it's hard to find a better champion for eBay than Devin Wenig. He really believed in the company and was really enthusiastic and took efforts to try to rebrand it, kind of shed its image as being this online garage sale and reestablish it as a place to go to buy new things. And none of it just really caught on. It just seemed like inertia has kind of set in. So right now it looks like Scott Schenkel is just kind of a placeholder until they find someone else. And that's going to be more telling. When they pick a new CEO for the company, does it look like they're picking a financial architect to further break it up, which seems most likely, or are they looking for someone to try to re-energize eBay, which was Wenig's plan that just never really went anywhere?
How do they compete with Amazon?
Well, not that greatly. I mean, they've tried to distinguish themselves more. Wenig would even joke at their eBay conferences, like, we're not the place to go if you want a roll of paper towels in an hour. That Amazon's got the commodity play and trying to replenish people's homes and cupboards and things, and eBay being more the place for enthusiasts. Like if you're a car buff, you'll go to eBay to find a hard to find car part, or if you're into video games and accessories, that you might go there to find difficult to find items. They try to differentiate themselves that way. But in terms of delivery, you could be talking days or even week or more to get things delivered sometimes. And those things were difficult hurdles for shoppers to get over. If you're used to getting things 2 days or less, and all of a sudden you go onto eBay, find something you want, you like, and you got to get it in a week, that's a long time.
eBay and all things Amazon, of course. That is Bloomberg's Spencer Soper. Thank you for joining me. Now, a change at the top over at Juul Labs as the highly valued private e-cigarette company faces a growing public backlash against vaping. The company announced that Chief Executive Officer Kevin Burns will be stepping down. Former Altria executive Casey Crossway will take over. Marlboro maker Altria also said today it was ending merger talks with fellow tobacco giant Philip Morris. To discuss, I'm joined by Bloomberg's Leanna Baker. So, Leanna, I first have to ask about the CEO stepping down. Is this all due to those investigations into the safety of vaping?
This seems to really be the week for CEOs stepping down. I saw, eBay before, but Juul really, had a lot of regulatory hurdles that I would say that some investors in the company like Altria thought that the previous CEO just didn't handle properly. This is quite a fall from grace. The company had been valued at almost $40 billion when Altria first invested, and who's to say where the valuation is now after states are really cracking down and whole countries like India are banning these vaping products.
Well, and you have a former Altria executive now taking over. What are the plans for this CEO? What can he do with Juul?
Sure. Casey Crossway is viewed as sort of a safe hand to oversee Juul's transformation. He had been at Altria for many years, and he had actually helped oversee some of the regulatory approvals for IQOS, which is the product that Philip Morris International is now rolling out in the U.S. through Altria. That's viewed as a safer product, at least in the eyes of these companies, compared to vaping. So he has that strength in Washington to deal with these regulatory issues, but it remains to be seen what changes he can make quickly, because this story just seems to be getting worse.
Well, I'm glad that you brought up Philip Morris, because they also announced that they were ending the merger agreement that they were in with Altria. Am I correct in saying that the merger is off and the CEO is stepping down, that I'm tying those two together?
It's certainly no coincidence, and the sources I spoke to today would agree that while these are companies that maybe are destined to be together at some point, now is just not the time because of all these negative headlines and regulatory headwinds around Juul. When Altria invested, they just didn't know it would get so bad with, 9 deaths connected to this and several federal investigations. So it really isn't a time to announce a $200 billion merger with that much uncertainty.
Well, and as you mentioned, Philip Morris has that IQOS product, and in their announcement today, they said that they're going to now work on getting that into the U.S. and work with FDA regulators here to get that approved. Any sense now of the extra competition that creates for Juul?
It's funny, IQOS has been around a while in terms of how it was in development, and it was supposed to be the hot new thing until vaping came along with Juul. So these companies seem excited to roll it out in the U.S. Atlanta is already, they're testing it there. But I haven't spoken to anyone who's used it. I certainly haven't used it myself, and I'm curious how, what will people be smoking exactly, because it's, heating the tobacco but not burning it. So it's supposed to be a milder inhale, but it's hard to say. We'll see how audiences and customers react to it.
Leanna Baker, thank you so much for joining me. And coming up is online dating service Match using, quote, romance scammers as a way to fatten its bottom line. That's what the FTC is saying. We have the story next. This is Bloomberg. Match Group fell after the U.S. Federal Trade Commission accused the world's biggest provider of online dating sites of tricking consumers into paying for subscriptions. According to the FTC, Match.com exploited messages from fraudulent accounts to induce non-subscribers to sign up for subscriptions. To discuss, I'm joined by Bloomberg's David McLaughlin. So, David, what is the FTC arguing here?
Right, so this case comes down to how Match treated subscribers to its dating site, Match.com, and non-subscribers. What the FTC says is that for non-subscribers who got messages or likes from people on the site, it was very often the case that those messages were coming from scammers and basically fake accounts on the site, and that when these messages were sent, Match would sort of advertise to those users, hey, you should sign up for a paid subscription to see this message and to see this person. But those were fake accounts, and so the FTC says that this was a way to get subscribers up. And on the other hand, though, those messages that went to subscribers, those subscribers never saw those messages. So the FTC is saying, look, this was deceptive to those consumers who weren't paying for paid subscriptions.
David, is the FTC quantifying for us how much Match was able to pad the bottom line because of this?
The FTC didn't cite like a damages figure. They did cite that about 500,000 users signed up for paid subscriptions in basically a 2-year period based on messages that were linked to fraudulent accounts. And in the lawsuit, one of the things that the FTC is asking for from the court is obviously an order to prevent Match from continuing these practices, but also redress for consumers who lost money.
What is Match saying for their part?
Well, they came out with a pretty lengthy statement saying that this is a baseless lawsuit. And they intend to fight it in court. They say that the agency is misrepresenting emails that they got from the company. Match also sort of touts its ability to shut down fake accounts that are on its site. They cite something like 96% of fake sites are shut down right away. And they also say that that this conduct is based only on Match.com and not Tinder.
Right. You know, David, it's very interesting. Analysts came out and said that this was previously disclosed in the company's 2018 financial reports. JP Morgan as well is coming out and saying that this FTC suit is not new news. Any sense that the FTC is behind on this and this may not actually be new?
Well, no, I think you saw the market reaction today. I mean, the stock dropped pretty significantly. It did recover afterwards. And even though it was disclosed, I mean, companies will typically disclose investigations a lot. But this was today the filing of the lawsuit. So this is actually the FTC taking actions going further, a step further than just simply investigating. Now, of course, it's up to a judge to decide sort of what happens next, and it's very possible that the case could be thrown out. But this is a significant action when an enforcement agency sues a public company.
Well, talking about all things dating sites, that was Bloomberg's David McLaughlin. Thank you for joining me. Now, coming up, Dropbox is dropping details on its revamped services. We'll hear from the CEO, Drew Houston, next. This is Bloomberg. Dropbox is going way beyond file sharing. The San Francisco-based company announced new services Wednesday, including a new desktop app, which functions as a digital hub where workers can collaborate with colleagues on projects that require access to digital files. With more on the announcement of Dropbox Spaces, it's Dropbox CEO Drew Houston. So, Drew, talk to me about Dropbox Spaces. What does this do?
It's been a great day. So we announced Dropbox Spaces, which is one of the biggest changes we've ever made to Dropbox. And it's our first step towards building what we call the smart workspace, which is a calmer and more focused working environment, and changes the Dropbox experience from being a folder full of files to an intelligent collaborative team workspace for all your cloud content. Because we watch as our customers are using Office, they're using G Suite and Slack and Zoom, Dropbox is becoming this new kind of app that brings all these other apps together and cuts down on the noise and makes it a smarter and calmer experience.
You know, Drew, I'm from New York, so I should have known that your name was Houston and not how I was Houston. I should have said that. So talk to me here about how you're building on current customers, or if you want Dropbox Spaces to be new customers.
Well, we've built our entire business on collaborating on files. But with the Smart Workspace, we're going beyond that on a bunch of dimensions. So first is supporting every kind of cloud content so that you can still have your PowerPoints and PDFs in Dropbox, but then you can also have Google Docs and Dropbox Paper Docs and Airtables and whatever you're using all in one place. And then second is it's a much more engaging experience. So in addition to the content, you can see all the conversations around it and all the context around it. And you can send someone a Slack message from Dropbox, or see your calendar, or start a Zoom meeting. And we found that a lot of our customers are struggling to piece all this together, having to switch between a bunch of different apps. And so we see an opportunity to organize your working life across all these different tools while still maintaining the choice to use what you want to use.
Talk to me about top-line revenue growth. When we dig into your financials, very strong double-digit top-line growth. Some analysts, though, at least on the average consensus on the Bloomberg terminal, looking like it could slow to in the mid-teens. What are you doing to maintain that top-line revenue growth?
Well, first, we start with a huge opportunity. And in many ways, Dropbox Spaces expands on our opportunity because certainly many companies or many teams need to collaborate around files, but every team needs to collaborate around content. And so we start with solving a problem that every person in every company has. And then with the new Dropbox and with Spaces, we're evolving the experience. And now we have a new generation of our product. It does a lot more for our users than we have in the past. And now our focus turns to driving adoption, getting in people's hands.
And analysts are actually really starting to forecast what could be your first annual profit in 2019. Are you on track to reach those goals?
Well, I mean, it's a testament we've got a really efficient and scalable business. And balancing growth and profitability has always been important to us. And we've, in many ways, applied the consumer internet playbook to business software. So we've got this really efficient self-serve motion where people spread the product for free. And that's how we've been able to reach, that's how we've been able to grow the business. And it's worked really well.
There's been a lot of scrutiny recently on unprofitable companies. You've been public for about 18 months or so. What's been the biggest challenge?
I mean, it's been pretty straightforward for us. And in many ways, we laid the tracks for being a public company years before we ever filed for an IPO. And so the biggest challenge is actually something that I think is healthy for us, which is it's like being drafted into the majors. There's a big scoreboard. You know, we got to perform. Creates a big sense of urgency. And on the one hand, there might be parts of that which are challenging, but I think in a lot of ways it builds a healthy discipline and rigor into what you do. It creates a lot of urgency.
Drew Houston, CEO of Dropbox, thank you for joining me. And coming up, cybersecurity firm CrowdStrike found itself in the middle of the Trump-Ukraine scandal. We'll hear exclusively from CEO George Kurtz next. This is Bloomberg. It's the phone call summary read around the world. Yes, that's the one where President Trump asked the president of Ukraine to work with his personal lawyer, Rudy Giuliani, and the U.S. Attorney General William Barr to, quote, look into his political rival, Joe Biden. But tech watchers took notice of one other particular line. Trump said, quote, I would like to do us a favor, though. I would like you to find out what happened with this whole situation with Ukraine. They say CrowdStrike. I would like you to do us a favor, though. I guess you have one of your wealthy people, the server. They say Ukraine has it. To address all of these remarks, I'd like to welcome the CEO of CrowdStrike, George Kurtz. Can you just first react to those comments for me?
The only reaction I have is that in 2016, we actually performed the DNC investigation. We worked very closely with the FBI, turned over all the forensic data, and we stand by the conclusions that we had, and they were backed up by the intelligence community. So I think a lot of what we've done has already been said, and after that, you know, I can't necessarily don't understand, where we are with things.
Fold this forward then into broader comments on where you think your company fits into general election security. We are approaching 2020.
Well, election security, I think, is a very important topic if we think about just how electronically connected now we are with voting machines, and we're past the hanging chads of yesteryear hope. So when we think about the ability to protect those systems, it's incredibly important for our democracy, as well as just the integrity of the election itself. So it's a big topic.
And what is your role in working with, let's say, federal agencies like the FBI or with the DNC or the RNC? Where do you see yourself playing a role?
Well, we're certainly nonpartisan, so we help all sides of the aisle and work closely with lots of state, local, and federal government agencies to make sure that they have the best security in place as they go forward.
I could do financial analysis all day long.
Yeah.
So let's dig into some of the earnings and what we can expect from you. Talk to me, let's just go through the income statement. Talk to me about top line growth. I'm looking here really solid, triple digits, expected to slow maybe a little bit, 80-40% or so in the coming years. Where do you see sources of future growth?
Well, I think one of the things when you look at CrowdStrike is its ability to cross-sell its modules, and that's a key element of our success. When we started the company, we looked at companies like Salesforce and Workday and ServiceNow and thought there should be the fourth pillar of cloud computing for security, the security cloud. It really hadn't been done before. And part of our success, I think, has been being able to collect data, security telemetry at scale, and then be able to create new modules on top of it and be able to cross-sell that into our customer base. So if you look at our most recent earnings report, we talked about 50% of our customers actually have 4 or more of these modules, and we have 10 of them today. And I think that has really worked out in our favor in terms of being able to go back into our customer base in addition to getting new customers.
And has the shift to the cloud provided a lot of future opportunities?
Absolutely. I think that's one of the areas where we've seen the model that we've created as a true cloud native architecture be embraced, and it's one of the reasons why we've been so successful. In 2011, endpoint security delivered from the cloud wasn't so popular. If you look at 2019 and beyond, it's a core element because it's not just about endpoints and laptops and servers, it's really about protecting workloads, and those workloads could be on-premise or they could be in a cloud like Amazon, could be in Azure or the Google Cloud, and that's really important. You have to be able to protect these wherever they're at.
When we take a look at the bottom line, not profitable yet, but losses are slowing.
Yes.
What's the pressure right now to be profitable?
Well, I think the way we look at it is, first, what are the unit economics? We have really good unit economics, and there's a greenfield opportunity in the marketplace right now as some of the legacy, I call them fossilized vendors, get acquired, change their business model, try to move to the cloud, which is very difficult for them to do. We think it's a great opportunity to go out and get new customers. We added 730 net new customers last quarter, which is over double from the year before. So as long as we continue to increase the rate of adoption of our technology, we'll continue to invest there. But what's most important is the amount of money we spend on sales and marketing from a unit economics perspective is right where we want it to be. And in fact, it's on the upper end of being very efficient if you look across the SaaS the SaaS companies in general.
There's been a lot of market consolidation. Symantec, VMware have been bought out. Does the consolidation help or hurt you?
I think it's a net positive for us, and I think it's a natural evolution of this market. If you look at what happened in Salesforce automation, you had Oracle buying Siebel, right? I think the natural comment around that is the fact that it was very hard to make a shift from a perpetual model, a legacy architecture, into something that is cloud-based and truly subscription-based. So a lot of those companies you talked about were having a hard time making this transition both in the cloud architecture as well as their overall revenue model, and they had these mixed perpetual subscription models, which is very difficult.
You IPO'd in June. It has been a tough year for some companies that maybe aren't profitable or valuations feel too high. Any advice you'd give on how to ride the wave?
Well, I think first you have to really start with a great company, and I think the elements of a great company to ride that wave are they have something to do with the cloud. They're SaaS delivered. They've got a subscription revenue model. They have high net retention rates where they keep adding new modules or new bits to their customers, and I think those are elements that really make you successful. I think the market is smart enough to figure out what companies have great earnings potential in the future, and those are the requisite characteristics that we've seen, and we're fortunate enough to fall into that category.
Thank you. That was CrowdStrike CEO George Kurtz. And still ahead, Amazon, it's focusing on Alexa privacy as it unveils new gadgets in Seattle. We bring you all the latest on all the newest Alexa products next. This is Bloomberg. On Wednesday, Amazon introduced the Echo Studio. It's a high-end speaker to rival Sonos devices, the Apple HomePod, and Google Home Max. Sonos shares fell 3% on the news. The new device looks similar to the HomePod, making it noticeably larger than any existing Echo. This speaker costs $199, and it's available on pre-order on Wednesday. I caught up with Amazon Senior Vice President of Devices and Service, Dave Limp, to ask him about the changes.
Well, we've really taken a different take on how audio is developed. Basically, we have 5 speakers built into it, 3 mid-range, a front-forward tweeter, and a bass that gives the sense of the music surrounding you, like kind of how the artist wants the music to be portrayed. And we think that's an industry first, and we're looking forward to seeing how customers like it.
You are taking on big rivals, Sonos, Apple, Google. Are you happy with your penetration rate?
We think that this isn't a winner-take-all game, first of all. And you mentioned one of those companies who is a great partner of ours in Sonos. They're really, really great partners, and we think customers want selection. That's always been the case with Amazon. We offer lots of selection and choice, and we want to give that same choice, whether it's Sonos or our products, and we're looking forward to seeing what customers think and whether they like it.
The pricing is interesting to me at a $199 versus the HomePod at a $299. It feels like everyone's really trying to be competitive here on pricing. Are you worried that it's a race to zero?
I don't think so. I think what we try to do is price our products with as much value as we possibly can. We've always had the philosophy since the first day with Kindle to price our products in a way that we want to make money as Amazon and the device and services business when customers use those products, not when they buy them. So if we give them good value and the service behind it is really compelling to the customer, they're going to use it for years and years and years. And we think that the price points we're at now are great.
Dave, I was chuckling a little bit when the headline crossed that said Alexa will now tell when I'm frustrated with her. How will she be able to tell that, and then what does she do?
Yeah, we built a pretty deep machine learning model. It's sort of the advancement of AI to be able to recognize when customers are frustrated. And it's important to realize we're not checking whether you're frustrated with the world around you or detecting that or somebody in your family. We're only detecting when you're frustrated with Alexa herself. And when that happens, we want to try to teach Alexa to kind of auto-correct herself. And the example I showed was a music example. I asked to play one track. She misunderstood. I got frustrated. She corrected herself. And we think that's going to be very valuable on the path as these digital assistants, Alexa specifically, become more conversational over time.
When it comes to privacy controls, what new privacy controls have you added with these new devices?
We did a lot on privacy today. We added new utterances that allow you to ask Alexa, tell me what you heard, so she can clarify that. You can ask Alexa in the coming months, tell me why did you do that? So if she does something that you didn't think was right, you can understand the context of that. And we added a new feature in our privacy hub, gives customers the ability to auto-delete their voice utterances on a rolling 3 and 18-month rolling window. And we think customers will like that as well.
Now, in between that rolling 3 or 18-month window, though, confirm for me if there is audio listening, transcribing, recording before I delete those.
We have a different setting, which, and I think we're the first in the industry, to allow customers to opt out of human beings annotating any voice recording that we might have. So you can also turn that off if you want. Some of the personalization of the service and some of the capabilities of the service will get worse if you do that, but if a customer wants to, we want to give them that option. And then we've always had, from the very beginning, the ability for customers to delete any single utterance, any group of utterances, or all utterances with a single click of a button, and those are all also in the Alexa Privacy Hub. So the key for us is to give customers lots of options, and they can balance the level of personalization and capabilities they have versus the level of privacy that they want.
Why, Dave, is it opt-out instead of opt-in?
Well, like I said, a lot of the capabilities that we get from those voice recordings makes the service more important. Let me give you one example. We just launched Hindi in India last week, or maybe 2 weeks ago. And we know that in the first 3 months, as long as we have enough data, that the service is going to get something like 33% better, more accurate on behalf of Hindi-speaking customers. If we didn't have that capability, we didn't have those voice recordings, we couldn't make those improvements. The state of the art of the science wouldn't allow us to do that. So we hope customers will come with us on that journey and be able to have us do that to improve the service. If they don't want, they can opt out and they can delete their utterances and everything will be fine.
As we talk about the competitive landscape and pricing on all of these devices, I wonder if hardware is profitable for you.
Well, we've always had the same business model when it comes to our hardware, which is we kind of strive to break even. Where we want to profit is from if customers use the device downstream. I mentioned Kindle, that we don't want to make a lot of money when we sell you the Kindle device, but if somebody chooses to read books and likes books, we'll make a little bit of profit from each book that they choose to read. We think that's super aligned with customers. That means that if, again, they put it in the drawer and don't ever use our device, why should Amazon get any profits from that? We weren't successful in delivering what we wanted. It also has a side benefit of that we don't invite customers to upgrade every year. We don't have to. We continue to update the software on our devices to make them better over time, so that to try to incent customers to use them. And we think that's a very good business model that aligns us with customers.
That was Amazon's Senior Vice President of Devices and Service, Dave Limp. Now, to discuss more about Wednesday's event, I am joined by Creative Strategies Principal Analyst Karolina Melon. So, Karolina, what was your key takeaway from the new products that you saw today?
I saw Amazon doubling down on two things. One is cementing the relationship that we have with Alexa in the home by giving us new use cases for existing devices, as well as new devices to expand, if you like, Alexa's capabilities within the home, and at the same time helping us to take Alexa outside the home. That so far has been a bit of a challenging situation for Amazon because, let it be clear, right now Alexa's a little bit trapped in our smartphones that are with us a lot of hours in a day and have other assistants on them.
Are you worried about pricing? If I'm looking at the Echo Studio, that's $199, undercutting the HomePod at $299. Is this a race towards zero as everyone undercuts each other on price to gain market share?
I think it's more about thinking what is the product for Amazon, and for me, when I look at what they bring into market, the product is Alexa and it's not the actual hardware. And so for them, from a pricing perspective, that is the strategy. It's going to be much harder, to your point about racing to the bottom, for hardware vendors that don't have a service that comes with that device, that don't have a way to earn more revenue from that service, to obviously be competitively priced.
What are your thoughts on the penetration rate of Amazon in-home devices relative to Apple, relative to Google?
Yeah, I think that if you look at the competition between the three, I would say over the past 6 to 8 months, it continues to consolidate between Google and Amazon. Amazon, because of the broader range of products and price points, have had and more time to market as well. As a higher penetration, I think that outside the home is obviously a different story, with Google Assistant and Siri being more pervasive. I think for Apple, the question, especially after today, to your point about HomePod versus Studio and their price point, it'll be really interesting to see how Apple responds to it, if at all, with a cheaper HomePod.
I asked Dave Limp if hardware was profitable, and he said that his goal is mostly to break even. Is that good enough for you?
Like I mentioned, it's good enough when you're looking at what else that hardware is driving, which is engagement with the brand, which is engagement with Amazon.com, which is engagement with other services like Prime Music, possibly now Music HD. So there's more that comes after they sell the hardware, and it's not something that other hardware vendors have.
How do you feel about data privacy? This is an opt-out, not an opt-in. Is that okay?
Is a step, obviously, from a consumer perspective, is an extra step. You would think that the other way around would be easier, but at the same time, if you always have me opt out, if I don't think about it, the device and Alexa and my interactions with Alexa don't get necessarily better. I think transparency is really the key to all of this, and so as long as I'm aware as a customer of what the privacy settings are, then I should be good. What I liked today was that they had new utterances that I now have with Alexa that do different things. They give me peace of mind because I can ask Alexa not just to delete my data, but also why she responded or it responded to something I said. I get engaged with her, so my relationship continues, and at the same time I get educated, so that, you know, for a lot of customers, I think there's concern because there's lack of understanding.
Karolina Melon, Creative Strategies Principal Analyst, thank you for joining me. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. Probably not going